Let's talk about a number that sounds completely made up. $72 trillion. That is the insane new record for the US stock market. To put that in perspective, it's bigger than the entire economies of Europe, China, Japan, and India, all put together. All while you're probably grinding away on a $60,000 salary with student loans hanging over your head.
So, that brings us to the big, flashing question. Is this the greatest wealth-building opportunity of our lifetime? Or is it a massive bubble that's about to pop and crush millennial dreams all over again? I mean, just look at that number. $72 trillion. That's the new valuation for all publicly traded companies here in the US. It is an absolutely unprecedented amount of wealth being created, at least on paper. But okay, let's bring this crashing back down to earth. Because on one side, you've got this $72 trillion market high. And on the other, you've got the average millennial staring down about $38,000 in student loan debt. The disconnect there is just huge.
Okay, so here's the deal. By the end of this, you're going to understand if this market explosion is your ticket to building real wealth or if it's a giant red flag. And even more importantly, you'll walk away with a super simple plan for how to position your own portfolio, even if you're working with a tight budget.
So why does it feel like you're standing on the sidelines watching the biggest wealth creation event in modern history just pass you by? Yeah, let's get into that.
To really grasp how massive this is, you have to see the US stock market isn't just leading the global race. It's practically the only car on the track. The total value of the US market right now is worth more than the markets of Europe, China, Hong Kong, Japan, and India combined. In fact, to put a number on it, the US market is now a staggering 3.5 times larger than the markets of developed Europe or even China and Hong Kong. That is an insane concentration of financial power.
And you know, for a lot of us, a boom this big, it feels kind of familiar, doesn't it? It gives you a little bit of a 2008 flashback. But the difference is, this time the stakes feel so much higher, especially for those of us who are trying to build our wealth from the ground up.
So what in the world is actually fueling this rocket ship? Well, the answer really comes down to just two letters: AI.
What's truly mind-boggling here is the speed. I mean, think about it. Just back in 2022, the whole market was worth around $30 trillion. Then, the AI hype train just exploded out of the station. Companies at the heart of it all, like NVIDIA, saw their value skyrocket, and bam, in just a couple of years, we're at the $72 trillion peak.
And if you pop the hood, you can see exactly where that growth came from. The tech-heavy Nasdaq, it now makes up $38 trillion of that total. It's more than doubled since 2022. The more old-school NYSE is the other $32 trillion. This is, without a doubt, a tech-driven boom.
Okay, now this is the part that most people are completely missing. While everybody's eyes are glued to stocks, something really interesting is happening with gold and crypto that you absolutely need to know about.
Just for some context, the entire market for Bitcoin is hovering around $1.75 trillion. Now, that's a huge number for sure, but it's basically a drop in the ocean compared to the stock market. But here's the interesting part. While stocks have been going parabolic, both gold and crypto have also been quietly hitting their own all-time highs. So, this is the crucial point. The surges in these other assets are not a coincidence. It's a signal. It's a sign that some of the so-called smart money is hedging its bets. They're quietly moving some chips off the table, diversifying away from what might be a super overheated stock market. It's a subtle clue that stocks might not be the only game in town forever.
Okay, enough of the big picture stuff. Let's get real about what this all means for your actual bank account. How can you, a regular person, get a piece of this growth without taking on some insane crypto bro level of risk?
It all starts with a really simple rule of thumb. Just aim to invest about 10 to 15% of your paycheck. Seriously, if you're making $60,000 a year, that works out to about $500 to $750 a month. That's doable. All right, here's your simple 4-step playbook. Step 1. If your job offers a 401k match, you contribute enough to get that full match. It is literally free money, a 100% return instantly. Step 2. Open a Roth IRA. This is a powerhouse account that lets your money grow completely tax-free. Step 3. Put it on autopilot. Set up automatic investments into a low-cost S&P 500 index fund. That way, you own a tiny piece of the 500 biggest companies in the US. And then step 4, the hardest part. When the market eventually takes a dive, and it will, don't panic.
History shows us those are often the absolute best times to be buying. And what could a simple portfolio look like? Here's a basic model. Maybe 70% in stock ETFs. That's your engine for growth. 20% in bonds for some stability, to smooth out the ride. And if you're comfortable with the risk, maybe up to 10% in something like crypto for that high-risk, high-reward potential.
But let's be crystal clear about something. Investing is not a sure thing. Markets can and absolutely do crash. What happened in the past doesn't guarantee anything about the future. And putting even a small amount into crypto means you have to be ready for some wild, wild swings. So if you remember just one thing from all of this, let it be this. Use this massive boom as your personal call to action. It's all about systematically turning your everyday savings into long-term wealth without getting sidetracked chasing the latest meme stock. Which really just leaves us with one final thought to chew on. After everything we've looked at, is it possible that this $72 trillion moment really is the single biggest wealth-building opportunity of our entire generation? And of course, just a quick and important reminder, this is all for educational purposes. It is not financial advice. Investing always comes with risk, and it's always a smart move to chat with a qualified financial advisor who can help you figure out the best plan for your personal situation.